Good morning, beautiful people of the internet, and welcome back for another Sunday special. And as you can tell, we have the great and powerful Wizard of Oz, that is Ross Harper. He's joined us again, he's back. So it's going to be a really exciting Sunday special. We have, as always, Helen Chorley, Adam Lawrence, and Piotr Ruzinek. And Carnage, I think, is the order of the day. Love a bit of chaos, love a bit of uncertainty. Uh, where do you guys want to start?
Well, quite happy to give the précis of the supplement if you would like. Yeah, had a few things to tuck into on the agenda this week, but decided to pretty much posit the theory that now Hunt is in and Kwarteng is out. That really, number one, there can't really be another change of leadership without a general election because you've gone beyond joke territory now, realistically. So I'm not feeling the here comes Sunak movement. He's the betting favourite to be the next Prime Minister. I think that looks like a lay to me. That wouldn't be a bet for me. I don't see, even if there was that changeover and then they called the election, I can't really see how the Conservatives would win at the moment. It would be an incredible turnaround. So my theory is more like Hunt's been brought in as a night watchman. Some people are calling him the de facto PM. I think it's more like a hostile relationship between Prime Minister's office and Number 11, which will calm the markets down because they're trying to persuade there's this sort of Chinese wall / disconnection between Truss and Hunt. They've never been friends. For those who don't watch EastEnders every night or the Westminster equivalent, they've never been pals. They Hunt backed Sunak in the leadership race as soon as he was knocked out. Everyone knows he's made no secret of wanting to have the top job. So now, finally, he's got the second top job. And I mean, on the face of it, it looks like a good move from that perspective. I mean, Jay had a couple of things to say about him that he shared. Maybe we'll leave those words till a little later in the. I'm not sure maybe after the watershed, but there are some fairly obvious analogies that can be drawn. But I think the overarching point is, he's seen as a safe pair of hands. He's seen as someone who's happy to make difficult decisions. And from the figures that have been filtering out from the Institute for Fiscal Studies and the likes, there's some difficult decisions to be made because this go for growth thing was a brilliantly conceptualized phrase come up with by a PR person who had no handle on the economic situation that the UK is currently in. So the good thing is that the markets have responded very clearly that if you let that bloody idiot make any more decisions, then we're going to make you pay more for your debt. It's as simple as that. As soon as she goes to a presser, the gilt yield goes 30 pips upwards. It's as simple as that. It is quite an incredible phenomenon to watch. And that really, if I was a hedge fund trader, I'd be making a couple of quid right now on some of the volatility spreads and the likes. There's no two ways about it. I need a new job, to be honest with you. Need a new. I missed my calling, Helen, as we've discussed before, and I'd be in there trying to make a few quid out of it. But Hunt's in, he'll be hostile. He'll make some difficult cuts. I think they're going to have to completely change. There's been more U-turns than a sausage factory. It's unbelievable. There'll be a few more, and there will be cuts, and there will be tax rises, as we know. But I don't think that'll be too much compared to the tax rises that Labour will have to bring in when they come into power. But I reiterated the argument this morning. Austerity was a terrible policy in the early 2010s. It was completely the wrong thing to do. It's now the right policy in that way that policy works, in that it's the worst policy apart from all of the others. So there's no way to do this apart from calm down the international markets, lower the cost of borrowing for the UK, get the credit rating on a safe footing, and basically do what Sunak said he was going to do, which is obviously very, very frustrating for those of us that were saying Sunak's the one, Truss is an idiot. It's never nice to be proved right in those situations, but it is what it is. And then, so what does all that mean? We've got about 150,000 households a month dropping off fixed rate mortgages. That's about 0.5% of all the households in the UK, to put that into context. Their mortgages are pretty much trebling because they're on an average of about 2 and they're going on to an average of about 6. That sounds awful, but remember they've been stress tested at 5.5 and they should have had pay rises and the likes. But unless those households have been very good boys and girls and put their spare money away every month or overpaid on their mortgages, which of course 20 to 30% of them will have done, and unless they've been promoted significantly since they got underwritten for their mortgage, which of course 20 or 30% of them will have done. The labour market's very tight. They probably had some nice pay rises. But then, of course, their energy bills have trebled as well, just like everybody's household, even with the cap, but at least doubled anyway, if not trebled. So 20 or 30% of those will likewise be enjoying a richer lifestyle than the underwriters of their mortgage companies offered up for them, because they'll have been spending the spare money. But there's still a lot of household savings out there. The household savings ratio has not yet collapsed. We're not yet having to live too far out of those savings. So it's not utterly clear cut that we're going straight into Armageddon. And I don't think we will. I think we'll now limp. It's middle of October. We'll limp to the middle of November in a cooling housing market. And then it will cool organically. And then the papers will all say the world's over just because it's December. Whereas the sensible press will say, do you know what? It's December, so there's not normally a lot of traffic anyway. So I talked a little bit about survival strategies, including, number one goal being holding on to your assets, being a bit philosophical about your cash flows, sweating your assets harder, whether the brutal reality is putting your rents up because it might be you or the tenant that takes this ultimately. Repurposing some stuff to HMO or SA. I'm not a massive advocate of these things, but if it's the difference between keeping the lights on and not, then you got to do what you got to do, and then not overextending yourself as usual. And if you're trying to do some creative deals, especially at a bigger size, vendor finance is smack bang on the table at the moment before the world gets used to getting higher percentages in the bank. While base is still 2.25 as we say this, although it's very clear that's on the rise. And the governor of the Bank of England, or old prickface, as I might come to call him, if he can remember what he's doing. I paid homage to the great Canadian that is Mark Joseph Carney today. Spectacular central banker, not the most popular, but he wasn't popular because he was difficult to read. And really, that should be popular by those of us who care about the future of the UK economy. Bailey just seems to do the wrong thing, and he's only saved from the wolves of the press by the fact the Prime Minister is so utterly incompetent. It would take a lot to make Bailey look good, but at least she makes him look competent, which I'm not convinced that he is. But luckily the rest of the bank are, and they've got some spectacular economists on the MPC, and that I have faith to keep things in line and on track. But if you're listening to this expecting base not to go up by, say, 1.25, 1.5 maybe next month, you're kidding yourself. And I think there might be a 1 and a 1, which would take us to 4.25 pretty quickly over the next 2 BOE meetings. It wouldn't surprise me. It's a movable feast because the gilt yields are move something like a rather shapely individual, androgynous, of course, in this year of 2022, where we don't make comments about gender or anything like that. But let's not get onto that today, because we might go full Peterson within the first 10 minutes. And that's the cliff notes. If anybody wants to agree, disagree, debate what the hell I'm talking about, any of defend Andrew Bailey vociferously, or Liz Truss, of course, but I don't suppose there'll be a queue for that one, guys, will there?
Not on this call, I don't think. No.
If anybody's listening and they want to defend vociferously either of those individuals, please write a robust reason why, and we'll attempt to torpedo it live on Facebook, YouTube, wherever else, and LinkedIn. Jeremy
Hunt coming in it would be the equivalent of if Labour was in power, that they put Peter Mendelsohn in the same position. You know what I mean? There's like this whole you know, they're not singing from the same hymn sheet. He's come in a bit tough. They're trying to calm the markets down. But for the love of Christ, there's got to be 15 other less hated people in the Tory backbenchers that could have shuffled forward and done this. But
15 or 50, sorry, was that the
well, I'm 15 and I'm being generous. You know, I'm trying. There's got to put some positivity out in the world. 15, and that's just because it's just because they're inoffensive. Because you know they haven't spent 8 to 10 years completely devolving the NHS and crippling the economy as a result of it. But that's nothing really to talk about today.
Well, now he controls the budget of the NHS. That should be even more interesting. I put in the supplement today, you know, cutting the NHS budget when you've got 12% of the population are on the waiting list at the moment. It would be the equivalent of detonating the suicide vest. But having said that, since old Liz got in, they pulled out the pins on all the grenades anyway. So it's a bit like the end of, you know, Leon, when he's on the floor and he gives the guy the pin out of the grenade. Reminds me of that scene at the moment, really. This is from Matilda. I can just see it. I can see it. That's in fact, if I was a cartoonist, maybe Matt will do one of those in the Telegraph or wherever his cartoons go.
It was a very broguish. This is from Matilda.
You do have the look of Jean Reno actually occasionally, Jay. So I think it would mean more coming from you.
Well, I'm always packing, just like just yes, out of nowhere.
This could go south quickly, and I thought there was danger when we talked about Jeremy Hunt, but this could go south quickly.
Well, and danger of talking about Jeremy Hunt. Let's see if we can do this, because the number of newscasters that say his name incorrectly. I mean, it's a perfect name for him, in fairness, but with alarm they do it. Then there was one newscaster. This woman, she goes, "Oh, I've never said that word before." Yeah,
Victoria Derbyshire,
brilliant.
wasn't it? Yeah, and coming from Victoria Derbyshire, it really didn't feel right. But you do feel like the occasional one must have had their mates in their WhatsApp group saying, "Go on, you can get away with it. Go on for it."
Let's put 20 quid on if he'll do it. Yeah.
I think Sigmund Freud would be having a good time with just how many of them it's happening in their subconscious, if I'm honest with you. So if they've got any doctors or nurses in the family, as you've alluded to, I don't think they'd struggle to mind their P's and Q's, but not their H's and C's, if you will.
But the bets are on when this word is going to come up in this chart. And I think the odds are high that it will be coming for 9:30.
We're not that professional, but surely we can not plumb those depths this early on a Sunday morning.
Depends who we get on a rant about. Who else we get on a rant about? Don't stop me.
Well, do you know what? I think it's probably a good time to segue the conversation away. Obviously, we've been on the retreat this week, and it's always a fabulous week. We always get some great people. We had a really good bunch this year. But let me just say, my lawyers have been advised before making this call, so I'll change names to protect the innocent. But it did appear relatively obvious to the assembled company that I have detailed files on shafters in the property industry. And by the time we'd escalated to Thursday night over dinner, we did discuss and agree the top 10 shafters in the industry.
Oh, amazing.
We would have all absolutely bloody loved it. It would have been impossible to record because some of them are more litigious than others. No real surprise entries, but an anonymous WhatsApp group, like one of those broadcast Telegram groups or whatever, was suggested with monthly updates on said shafters. But number one is so far ahead of the rest of the game. You know, I thought about dropping little hints like perhaps he shares a name with a famous fashion designer, things like that. You know, but I wouldn't stoop so low. But I did consider whether I should start a Facebook group called the Church of Shaftontology, which went into detail over. As it goes, apparently I'm an operating Thetan level 8, the David Miscavige of the church, if you will. Not the most ideal analogy, but someone's got to keep these people on the road. There was a robust discussion was enjoyed by all.
What started that conversation?
I love that.
I think it was like people would go round and say, do you know this person? And then a couple of people would say, oh, no, yeah, I'll follow them on social media. And then it would come round to someone at the table who may or may not be me. And I would normally say, he's a shafter. So look out for them. And this is why he's a shafter. And his associates are also shafters. Or I'm not sure that he's a shafter, but he seems to partner with a few shafters. And, you know, shafters by association is always a cause for. And this conversation was smattered with the occasional check of Companies House and various balance sheets and P&Ls being shown around to show the.
These things don't matter, Adam. They don't count because people just keep all their houses and properties and buildings in their own personal name, so you can't see them in Companies House.
Yeah, I've heard that one before. I've heard that one. Yeah, especially when they're live on YouTube saying that they've got them in company structures and they just don't exist. It's very common. I've seen it a lot. Scotland was represented, which perhaps won't surprise you. Although Wales was squeaky clean, which I'm sure means we haven't done enough research on the valleys as yet to come up with any of the top 10 located in Wales or Northern Ireland. Very well, very clean.
You know somebody that's a shafter in Wales.
Top 10, Ross. Top 10. You've got to be pretty. There were some big shafters in there, very, very big. As Donald Trump would say, the very, very biggest shafters.
Stiff competition. And actually, we have a special guest from that discussion on Thursday night.
That's about the right size as well, full size.
Look, it's like...
It's bigger than full size.
It's got bloody handles on it.
Like many of their claims, it's also inflatable as required. So I like the irony of that.
So was that the best thing to come out of the retreat?
I haven't had the feedback surveys yet, but it was well received. I think it was well received. We had a few side discussions around how much education people have paid for with whom. Very interesting always to see. There are those who've never done anything before, militantly, never trusted anyone. Why they picked Rod, Sue and I have no idea, but there you go. They'll never do any again, obviously. No. And then there are people who've spent, 6 figures on educating themselves. What was interesting this year is there was quite a good focus on pragmatic education that people had done, not the cellular sizzle and not the sausage sort of stuff. So that actually... maybe we had a chartered town planner, for example, who've done the route that Jay often recommends in terms of if you don't want to do the degree, go and work in the commercial or the residential estate agency or whatever. There's been quite a bit of learning by doing, which was great. A pretty healthy attitude towards all of that, really.
Cool.
Amazing. And we've got some comments. Jessica wants to join the sign up. Yoni loves all the smiles. Thank you.
That's nice.
Edwards, DA, we want to say for this. Although we could, I guess.
Do you know, Ed, rightly or wrongly, I mean, I have no idea who you're talking about, but if it could be someone I think you might be talking about, he didn't make podium. He was fourth. There were some very big shafters. There were some very, very big shafters mentioned, So we went on, there were a few things. We went on quantum, we went on outrageousness of lies. We went on, there were a number of robust criteria, and he was fourth, and there wasn't a problem with him being fourth, because if I named the top three, you'd say, oh, yeah, okay. I mean,
Did you also go
on the list?
Did you measure kill count as well, or did that not come into it?
Well, quantum is a robust metric covering many bases, as you know.
Oh wow, Jay, I'm counting this as you said the word.
Oh no, be fair.
You sneaked it nicely, but you said it.
And it wasn't 9:30. There we go.
what other comments do you have? Well, Edward's saying he's getting better, getting a better ranking.
Yeah, these are the type of people that do not like to be outshysted. Do you know what I mean? Like they want to be the pinnacle of
They're a
prickness.
competitive bunch. Yeah, competitive bunch.
I even saw a post of that guy with Ferraris in London or something. Was that it?
Yeah. Wasn't there a 10 grand house in Liverpool with a 71 grand refurb or something like that? Wasn't that the case? Yeah.
Well,
that's the amazing thing about those people, that just when you think they can't get any worse, they actually do. I've seen some of that myself this week with a particular lady shark.
Lady shark. Do.
Yeah, I think we talked about it so many times on our shows, and like you, Adam, done the post how to like protect yourself from those things, from these kind of people and stuff, and it's still happening. And it's quite how do you say it? Like I don't know, like how much we can talk about those things, and people still doing this, and it's quite. I don't know, like groups like Partners in Property or stuff like where people can actually get access to like a proper knowledge about who they're associating themselves with, and not go just by the marketing slogans, right?
Well, that's what we've always tried to do, yeah. But I mean, I've had a relatively public fallout with someone else who runs a networking event, who's well respected, who's done it for a long time, where his philosophy was more like, well, I just can't really control who's at the front of the room. And I'm like, yes, you can, mate. You book them, right? You book them. So you can't hide behind caveat emptor all day. But likewise, and you know from physical meetings you guys have been in, we tend to do a reminder. If someone mentions the word Bitcoin, that's normally my alarms triggered. And we tend to do a reminder of, doing your due diligence and being cautious before you get into bed with people. And it's another thing we discussed this week, people kind of think, right, maybe at the moment it's a bit hard to invest in something if you're a holder, because it looks like prices might come down a little bit over the next couple of years. So it's not that attractive because a lot of your returns will come from capital growth, right? And then if the interest rate you've got to back out onto is high as well, if you've got limited prospects of capital growth and no cash flow in the immediate future, then obviously the market kind of grinds to a halt a bit. But then the next step they take is, so I'll lend the money out. Now, people going into the lending business with no experience of lending money is the same as going into any business without experience. You're becoming an underwriter. You need to understand credit risk. And let's face it, if you've just found 2 reasons not to invest in property, why are you lending it to someone who wants to invest in property? Unless
it's because of 100 grand. I hear one of your shafters friends put a post up where they were saying that basically you've got 100 grand in the bank this year, and if inflation hits 10%, you'll have 90 grand in the bank next year. And I had to post and say, by the way, you've still got 100 grand next year in the bank. You've just it's got less buy, or you can buy less with it. Still got 100 grand. I think it's all these fear techniques to sell people the concept of trying to do something.
Yeah, the old return of investment before return on investment once again springs to mind. It's a funny old thing. The fear, the selling on fear. And I think we'll probably see quite a bit of that from the aforementioned shafters over the next 6 months or so, whereas really people need pretty pragmatic, pretty boring strategies to get into, and then some creative techniques which will come back to the fore that maybe haven't been used that much, because someone described it very well the other day. We've gorged on the cheap debt, we've gorged on it, and if we've made a profit, then great. And we're not the only industry, private equity has gorged on the cheap debt. In many ways, you can become a bit complacent and a bit lazy. Now you've got to work harder, and you've got to be a bit more cautious. And you need more discount in my book, for example. But of course, the point of these economic conditions is they organically provide more discount, right? Because if prices are deemed to be possibly dropping, and people need to liquidate because they can't hold on to their assets. There was a really good point raised in Rod's broadcast with Mike Kovacs, the most recent one that he's got out, where he talked about the difference between 2008, where a bank had lent 31 million on something that was worth 30 million. So when the price dropped to 20 million, it wasn't that attractive to repossess it because there'd be a big write-down. So they'd actually try and restructure or get the loan serviced or whatever. Whereas in the new world, yes, the debt might have been super cheap, but they might only have lent 15 or 20 million against it. So it's a lot easier for them if it drops to 25 million to say, well, look, the covenant's breached here. We're going to take that asset back. And now I see the logic in that as fairly irresistible. We could see the recovery process start to accelerate over the next 9 to 12 months. Not so much in residential owner-occupied stuff, because I think the government will probably step in on that front if they need to, because they step in at the drop of the hat these days anyway. They won't want Help to Buy underwater, although some of us have been banging on for years about Help to Buy would definitely be underwater when you're lending 95% against a new build flat that's got a 15% new build premium in it. Yeah, that's 110% mortgage, guys, right? It's the same as it always was. But anyway, luckily, some of us have been banging on about that for years, just like other things that some of us bang on about in a very boring, methodical fashion. And never say I told you so or bring them up after the event either. Never do that.
Yeah.
Right. I have to make an exit at this point, guys, but I'm going to leave our special guest.
Welcome, Paul. Nice to see you.
Bye, Helen.
Bye, Helen. In times like this, I'm kind of like always curious what businesses Ross is getting into. Because you're always very cautious and very on the ball. And
so I'm a trader at heart. I like buying and selling things, and I think I'm going back to buying and selling things just for a short period of time. My personal view in the property market is, unless it's an absolute steal just now, don't touch it. There's no real requirement to own stuff. And I have been quietly selling down all my bigger assets for the last 9 months, 12 months. I've sold my commercial stuff, sold my industrial stuff. I'm just selling out to I'd like to say I'm increasing my war chest, but I think that's the technical term if you're a shafter. But the reality of it is I'm paying down debt with it as well. So the money's coming in and I'm just paying down expensive debt where I can to try and take things out. I've got a couple of development sites that I own. I know this is really negative. I've got a couple of development sites that I've put on the market. I think that other people will be able to make money out of them, but the way I'm structured, I don't think I can. My building company, I've diminished quite dramatically. But I've been doing option flips. So back to the stuff I did 4 or 5 years ago, buy it for 40 grand, sell it for 80 grand out through auction. You lift a 30 grand profit at the end of it, and just trying to multiply these things up. Assisted sales are things that we're about to get back into in a bigger way as well. Try and see if we can do a wee bit more of that. And I've been flipping and trading assets. Well, they're not really assets, but they have been for me. Cars, watches, all the things. I think I've mentioned this once before. I've had a good wee run in watches, which are I've been buying off people who need money, and then so there's loads of, I live in Dubai, so there's loads of people, Russian people who actually need instant cash. So you've been in a position to buy stuff off them, some quite high end stuff as well, and then just sit tight and hold on to it until you find a buyer for it. So it's quite a liquid thing. A watch is a really liquid thing in the higher parts of the market. It's identical to property in terms of there are people that know what they're doing. There's traders, there's dealers. There's a whole marketplace, and you've got the companies like Richard Mille, you've got Rolex, you've got Patek, who basically are like the house builders in the market. They basically set their prices and sell them, and if you know what you can buy and what you can do in the second-hand market, some of the stuff is worth more. That market has come down at the top end, maybe 25 or 30%. So it's been interesting. Again, that forced quite a bit of fear into the marketplace, which is just like property. So you just know that as long as you can pick the things up at the right price and take the right punt, it works quite well. I have, just because of the general slowdown in the UK, I have been looking here. I've set up a business here for flipping and trading things or any types of things. But we've also set up a hairdressing business. So we've basically done that to try and create dirhams and create money within Dubai so that we're not bringing money out the UK into Dubai. If you look at it, it's very, very obvious. I transferred £100,000 out last year and got 500,000 dirhams. I had to transfer back, what was it, 410,000 dirhams last week to put 100 grand back into the UK. So the reality is, I'm 90,000 dirhams up if you want to look at it, but as we're closely taking money out of the UK, it's just always easier to try and have some kind of business here that we could live out here, so we're not constantly doing that transfer, we're not exposed to it.
I think that's mega interesting, because a friend of mine has had a recent windfall, and we were discussing the relevant currency for him, because he's in the UK, wants to stay in the UK, he has some exposure to the euro, none really to the dollar, and he doesn't really want any. I always think about it in terms of where you're going to spend the medium or long term. And obviously we don't necessarily know for sure where we'll spend the rest of our lives, but I always encourage people to think about it in that way, that, you know, it's like anything, don't take risks you don't get paid for. Currency risk is a thing, you know, and there's been some major, because the dirham is heavily related to the dollar, isn't it, Ross?
It's just pegged. So it's the exact same thing. So dollar moves, dirham moves. It's equal. It's not safe, obviously, but in terms of the currency market, now that I've been here a year, I'm a lot less worried about it.
But given where the revenue comes from in terms of oil and the petrodollar, that it doesn't offer major economic stability risk to the UAE doing that.
Absolutely. And the difference, I suppose, here that I've noticed is that it's a massively growing market. A year ago, I would have said it's unsustainable. It was up 30% previously, house prices. They're up 35% again this year. The biggest house price in Dubai got achieved there at 600 million dirhams, which is...
I saw that, yeah. That's
150 million
now. Yeah, yeah.
So lots of rich people...
How is the new pad anyway? Is it any good, or is it...
Here, yeah. That's the other. Doing projects in Dubai is not quite as easy as it is in the UK. It's slow, fast. Fingers crossed.
Nice. Well, it's funny you mentioned this kind of like setting up something in the country there, because I was mentioning to Jada, I was thinking of like a team of a couple of people and creating like a co-working space in Lisbon. And that's kind of focused on businesses, entrepreneurs, and like it really comes from my own kind of need to have an office, but also the fact that if you're involved in a business like that in a local area, then it brings a lot of people to like in the center of a lot that's happening, and it's about bringing connections and also making some euros while doing that.
Builds a network for you as well, doesn't it? It's a great idea. I think a business partner of mine a few years ago described it. He has a really good way of describing things really succinctly. And he said, look, I look at it as, here's the property portfolio I built. He built most of his pre-08. He wasn't really in any trouble, although the pricing in his area suffered a bit, not hugely like, say, a Liverpool or something like that, but it suffered a bit in 08. And it was very slow to get moving again. Probably spent about 8 years pretty flat, you know, and then it's taken a massive bump upwards. You know, 80 grand houses are now worth 130 within sort of 3 or 4 years in recent times. So if they go back to 120 or 110, it's still not the biggest deal in the world. It's not a big problem. But he describes it as, that's the existing money that I've got. He sees that as his wealth. It's almost kind of ring fenced. Let's create some new money. How do we create some new money? Maybe we do more of the same in property, but with different tactics than he used pre-08, or maybe we do something that happens to involve property, but might be more hospitality, like FA, sort of holiday let focused, or if there's a business for sale that's got a property asset within it, you know, that's the sort of stuff I've started to specialize in. Then we'll look at it, because he's got a very all-round business skill set, you know. I'm obviously have a Master of Business Administration, which makes me all powerful and all seeing in general business situations, just in case John Cox is listening. And it's quite a good team, but it makes sense, I think, Ross, to be sort of dead flexible at the moment. And I think in terms of, I don't think that was all negative what you said. You know, I think that what you also find, I slid this into the supplement today, things like rent to rent, and people think it's a bit of a dirty, is it a word or is it 3 words? You normally have a hyphen, don't you? But however many words you think it is. Whereas, one of the things we've always, knocked rent to rent for has been, well, you've got no exposure to the capital growth in the asset. Now, if you think things are going to go down for a couple of years, you don't want exposure to the capital growth in the asset, but you do need to be cautious that your underlying landlord isn't going to drop off a fixed rate and then turn around and say, hang on a second, I've got to break the contract. So there'll be more need to understand other people's underlying structures. But I'll give you one example of something we've been looking at over the past sort of couple of weeks. It's interesting because what's changed is now there are companies that have got, and this is not just property companies, right? Companies that have got a certain level of debt at a fixed rate. And those fixed rate debts are actually well in the money now. We completed 4 remortgages this week that have been hella slow, probably 6-7 months in getting them over the line. About £500,000 worth of debt, 3.39%. And I mean, there's a little dance in the office when you get stuff that's that far in the money. It's a 1 and a bit % discount on the 5-year bond yield, let alone the margins of the bank being added to that. Now, of course, they've put that money aside from money that they'd raised at 1.7% or something like that. So they've not lost any money, but it's fairly self-evident that money could go out the door today at 6% rather than us at 3.39. Now, most of that's been driven by the lender being so bloody slow. Don't get me wrong. We tend to turn things around on the day to make sure the process is moving along, and the service levels are still, in the toilet on that front. So again, putting a positive spin on that, there's probably more angle for private investment because speed can be absolutely critical in these situations. It's going to be more critical as we go towards more of these fixed rates dropping off and ultimately people needing faster money. We haven't seen that. Ross talks with authority about death, divorce when he talks about motivation, usually within the property context, but really it counts for every context someone wants to sell something. And what we've not seen over the past couple of years is debt really putting any pressure on that at all. And that's now suddenly going to sort of flip the table up and put massive pressure on people, which inevitably means more deals to be done, rightly or wrongly.
Well, it's an interesting. I wrote a small article recently for somebody where I said, in a rising market, the sellers move faster than the buyers in pricing strategy. In a negative market, the buyers move far faster than the seller will on their expectations of value, right? And I was thinking about this. We wrote something for some. I've been writing stuff for a couple of weeks, too much stuff for the last couple of weeks. But I made a comment recently that 4 decent-sized auctioneers in the country have just released their largest catalogues. Not just like their largest November catalogue, but their largest catalogue. And Barnard Marcus is 350 plus lots. Auction House London is 250 plus lots. Clive Emerson is 150 plus lots. These are not small. At Barnard Marcus you'll find in the mid to late 2s at the best of times. So there's a fear to be played with here in terms of there are some people that may be coming up to the end of a fix and just think, right, get rid. There may be some people thinking, right, I'm just going to emigrate to some tiny island in Southeast Asia. There's people that are going to be doing all these different crazy things, right? But we did some interviews with some auctioneers, 6 or 7 auctioneers, and all but one, and I won't give his name out, all but one are saying, we're tacking on a 10% additional discount to the standard auction discount. So standard auction discount, depending on the asset location, will be anywhere between 10 and 20%.
You don't need to give his name out when you smile like that, Jay, I tell you.
Well, those who know, but it would be quite litigious of me to throw it out.
We're being cautious on our naming and shaming today, yes, absolutely.
We
I think we understand each other as we often do Mr. Howard, as we often do.
Yeah, I'm hoping that the current economic climate may deter them for spending a lot of money on litigation, but the
They're gonna need
statute
to
of
get some revenue
limitations is
from
6
somewhere,
years
mate,
on this
so-
stuff. So
So yeah, so is it
That's
time to buy
really
into some asset recovery firms, Ross? Is that our best way forward?
I think so. I think you sit tight for 9 months and hide your money under your bed for a wee while is probably the smartest maneuver just now. If you don't need to buy something, don't buy it. And I know we're all involved with lots of people who want to acquire lots of houses. But is there any point in a tight market, which we're in just now? And it's really interesting what Jay's saying about the auctioneers, because I think loads of people will be looking at it and thinking, well, if I can get out now at a slightly higher price and have the surety of getting out, which is the best thing an auction can get used for, you actually don't need to buy anything just now, and it's not your strategy. What's the point of buying something where you think chances are, and you've obviously written about it quite a bit, Adam, that chances are that prices in a year or 2 years' time are going to be significantly lower? Why not just sit tight, sit secure, don't take the risk on, even if you're buying at a 30% discount just now? Is there any point if there's a 15% change in the marketplace? Are you better not holding off and waiting till super deal comes along? Because it will.
I think what maybe is countering a little bit of that in my mind is prices for materials are now going down and things seem to have smoothed in that department. So if, and it's a big if, you've got a realistic landowner vendor and you've got an acceptance that building now costs £2,500 a metre, let's say for the sake of argument, actually you may well deliver this at 1,800 a metre if you're clever with your procurement side, and you might layer some extra value in that way. But generally speaking, I think the thing that's been, I don't know if I said this before, but the thing that's holding the market together, because we've got a number of things that are on the retail market for sale, because a bit like Ross for 9 months, probably less quietly because Ross just gets on with it, whereas I like to shout about it a lot. We've been disposing of a few assets and focusing on picking up stuff that's got really strong cash flow. So I think the one counter maybe to what Ross has said is if you've got really strong cash flow and you're getting that big discount, then it might well still be worth doing, but that's obviously quite a tight criteria. But what's holding some of these deals together is that our buyers have got a mortgage. It's 4 months, 5 months into the process, and their offer's going to expire, and they've still got the 2.39 or something like that fixed for 5. In which case, it makes economic sense for them to press on and buy the house, even if they're paying a little bit too much, because if they lose that mortgage offer, they might be either stuck back in rental for another, 3 or 4 years. So they're motivated that way. So we've still got quite a few motivated retail buyers. But Jay's points around if the stock is up, say 40%, and I'll look forward to reading it's always good to be well ahead of it. I mean, you guys are on top of how many lots are being offered rather than waiting for David Sanderman to write his EIG report for the month or whatever, which is great. It's always the leader of the market, isn't it? And we're going to see some more. Well, I did a little tiny analysis in the supplement this morning. Solihull had moved from 80% SSTC to 65.5%. So still a seller's market, ultimately, obviously cooling. But actually the stock number is still about 7 or 8% below where it would have been, say, 3 years ago. Now, stock has trended down over time. You've still got some motivation, but you haven't got that feeling. I think most buyers now will be in that place where they won't have that mega feeling of panic where the market is running away from them, because it's very clear that it's not running away from them anymore. And that the building material, although there's different factors behind that, of course, but all the materials and the commodities going up does seem to be over and subsiding. And it's very difficult to make an argument. Don Woodward put a comment on one of the supplement posts today and said, it's difficult not to see recession. And that is true, because whether you saved the money, paid it off your mortgage, or certainly if you consumed the extra money every month on going out or whatever, well, as soon as your mortgage drops off, that option has gone. And so you will see a material drop. Only small, but 0.1, 0.2 every month is a significant thing if it happens over the course of a year,
So
you mentioned.
I was just going to say that the material costs are coming down, but there's a real staff shortage in terms of finding quality tradesmen to do things. It's really expensive. And where you might have been paying a joiner £600 a week previously in the outlying areas, they're now looking for £1,000 a week. And the reality is, I think that's going to be a really, really hard position to turn back, because once you've got £1,000 a week in your pocket, it's going to be quite a tough thing to then turn around and say, well, fine, the market's getting back to normal, let's go back down to 600. It's going to be a really kind of tough situation. The other thing to add to Jay's comment there about volumes in the auctions, our commercial people who put properties into auction, so lenders, solicitors, all these types of people, we're 500% up on those people looking for auction valuations just now. And speaking to all the other auctioneers, it's the same. So there is obviously, in the background, these big companies are making decisions and thinking, look, let's just get out of a problem just now. Let's not sit on it for as long. Now, legally, they can repossess now. Legally, they can do things. And lots of people are sitting, because on a growing market, it's not a bad thing to hold on to these things, because the market might outgrow the debt. But I think just now there's a kind of finality to it, which is if we can get something done pre-Christmas, and then we go into the new year, I think things might start to change dramatically with the onset of the credit card bills coming in, people's rent payments after Christmas. The fun of Christmas goes out of it. There's a bit of a deflation in terms of everybody, and then it just could get bloody hard. So I think they've already factored it all in, because we're seeing stuff where they're not even bothering with an estate agent just now. They're just saying, let's get the auction valuation, let's get it done, dusted and sorted. So
it still counts as open market, doesn't it, surely? So, they can do it. Are they this speed because they're worried the prices will come down with relative speed? Yeah, but the trouble is, this is the same as any of these situations. When everybody thinks the same at the same time, surely the likely result of all of this is going to be a large percentage of unsold lots. Surely.
Well, I mean, the modern day isn't really unsold; it's withdrawn.
That's kind of like Dominic Gasco's the presentation, the webinar on Thursday. Like, I'm going to share one of the slides that we did about the actual real results from the auction without filters, because a lot of auctioneers, they just list things and then they withdraw 30-40% of the stock on the day of the auction. So basically, this is like a real example of one auctioneer, like 778 lots listed. But they actually just offered 95 on the day. So the headline, they sold 99, and the headline percentage sold is 80%. But it's really 55 if you take into account all of the properties that were listed.
And so pre-COVID, Piotr, would you have an idea of how many would have been not offered on the day, or would they have just offered pretty much everything?
It depends on the auctioneer. There's some auctioneers that even now, even if they've got no one registered to bid, will offer some stuff, right? Because there are people based on their bidding platform that can just turn up and bid. They can just click on any property that they like.
They're not taking deposits beforehand. They've got a hold on a credit card or a debit card or whatever. Yeah. So you do that once and you can bid on anything, sort of thing. Yeah.
But I think that the percentage withdrawn was probably around 10%. I don't think it was higher than that. And so you could pay some attention to what was the percentage sold. Now it's just a marketing number, really, to show. To
pretend what's happening isn't happening. Yeah.
I think also that's driven by EIG, isn't it? Because they've now established quite firmly that they're the best presenter of information in the marketplace, and they're the ones who provide the stats. So if you're marketing your auction and you're saying your competitors are all saying they're selling 90%, but you're only selling 55%, you're not comparing apples with apples. If you're keeping all your stock in, you are if you're removing your stock and only selling 50%.
Well, I mean, if you talk to David about this bit specifically, and it's a gripe I have about it, because it's an imaginary thing. It's inflating the market that some auctioneers will take the same bit of stock on and keep reducing the price until it sells, so you don't have to play these kind of games. If you don't have faith in the asset at that price in the first instance, you shouldn't take it on. But as is the case with most professional real estate companies, from estate agents to investment agents to letting agents, is you agree it at the start to get control, and then you work it down, right? And there are some auctioneers that are massively agency backed, and they filter that through into their auction department.
It's interesting though, Joe, because from my experience of open market agency, the best by far, and I mean sort of at least 3 times as good for less cost, is going after stock that other people have got on the market, because first to market only sells in a flat market, 35% of what they list. Whereas if you're second in, the vendor has already had a taste of the market. They've become more realistic. They're disenfranchised with the person who's overfluffed them to get the instruction in the first place. And you sell more like 70% of that sort of stuff. So you're sort of doubling your success rate at probably a third of the cost of getting in the leads of the initial first to market stuff, because you need to do all your front foot marketing to get that stuff.
This is a massive part that probably isn't talked about a great deal, but there are some auctioneers that will, once the property goes unsold in your auction, they will download your legal pack, find out the name and address of the seller, and canvass them. That's exactly what your principle there with the estate agents. That's exactly what the agents do. Oh, your property hasn't sold for 3 months. You must be coming towards the end of your sole agency thing. Come and have a chat with us. We'll make you a nice coffee and make you feel good. But
is there anything wrong with that? Is there anything wrong with that?
No, it's business.
I think it's really smart business ultimately, isn't it? It's
surely the smart people might be the developers doing that themselves, or the owners doing that themselves, and
or the firms who have their, really, if the agent was smart in the first place, it's not like it's difficult to find an auction partner these days, right? So they'd have their own auction partner and say, well, now we need to start considering working it down the pipeline if we want to, you've got to taste the motivation and gauge the room, haven't you? And ultimately that can be the best thing for the vendor. So it's not like we're talking about unethical practice here, not in my opinion.
No, but it's you find you see interesting ways that auctioneers try and combat this, and one of the best ones is that they block out the name of the seller and the address of the seller in the legal pack, and some are diligent enough to remove the solicitor's details as well. And that's a way that you kind of see these counter-espionage attempts by the auctioneers to kind of retain control over the client. So if anyone sees any legal packs, and this isn't one auctioneer over another, tons of them do it. If you're seeing that the name is blocked out, you're thinking, why are they blocking out the name? What does this mean? That's exactly what it means. That's exactly why they do it.
I remember there was one auctioneer, and some of them still do it, where they literally put like this black rectangle over the text, and literally all you have to do, click and move it.
Yeah, copy and then paste.
I'm literally like, why put that much effort if you're so incompetent in actually moving it? Anyway, but if anyone wants access to that Thursday webinar recording, I'm going to post a link now to you can join the mailing list and send it over to you.
Sounds great.
A really good comment. Amy Lawlinson asked a question. She appears as LinkedIn user for some reason. What do you call the opposite to shafters? They must exist too. For every action, there's equal or opposite reaction. Do you have top 5 on this call?
Well, I think you've got shafter hunters, haven't you, who need to be cautious, because if they're over enthusiastic and vigilante-esque, then that can be quite damaging. So I always try and have detailed files on each shafter before I make too many pronouncements about them. As far as the virtuous ones go, the problem I think, Amy, we all have is, the shafters are much better salespeople. The salesmen and the marketeers are the ones who get the opportunity to do all the shafting. And sadly, we kind of sit in this bucket where we pick up too many of the pieces, which I know you will have helped to do over the years yourself with involvement in property sisters and things like that. We all know there's lots of sad stories, unfortunately, far more sad stories. And and we're only really talking to the survivors, aren't we? There's a big survivorship bias here where lots of people blame themselves. There's lots of those sort of very clever neuro-linguistic programming techniques to make people blame themselves. Some of the others have been refunded or partially refunded and contracted under NDAs and all the rest of it. So it's a tough.
And then you have all of those that are just ashamed and embarrassed and just won't come forward. And that's probably the bigger pool of people.
Of course it is. Of course it is.
I think the biggest pool of people are the ones who have not lost the biggest sums of money. It's the ones that have been promised something kind of ethereal and then have spent money on it. And there's hundreds and thousands of these people. So the shafting of each individual person isn't enormous, but the global shafting of the volume of them is huge. Well, it is. Countries to do masterminds with other people, and the process is curated in such a way that they're losing £3,000, £5,000, £10,000 out of it, which isn't the end of the world for most people if they're getting involved in property. But it does deny them the right to buy a house, for example, put a deposit down under the old rules. Or
I think the bigger problem is that they target those who are financially vulnerable, who even those £3,000, £5,000 and £10,000 are a very large sum. They're usually doing it with debt fund. You know, the old right this morning we're going to raise the credit card limits to make sure you can buy a house with a credit card, and then this afternoon, we need to get our credit card limits up to 20k. And this afternoon, here's our course at 19997, which will take you to the next level, and you won't need any of your own money anyway. And how convenient that you've raised your credit card limits to 20k in the morning.
So, Adam, you're a bit of a novice at this, because what you should have started with was, as opposed to saying, what I'm going to teach you, is what you're going to say is, this is how I started out. I raised my credit card limits to 20k, and I now own 8 houses. Would you like to do the same?
I believe you have to go and stand over on the left of the stage to talk about when you were a baby first of all, and you were raised by wildebeest or whatever, and then you have to then go over to the right hand side of the stage and flash your fake Rolex at people to tell them how successful you are, and then your leased Ferrari is in the car park or whatever. That's only as I loosely understand it, though, Ross, as you say.
Do they not always tell the story about how their goldfish died and it impacted them drastically, and they do all of this for poor old clownfish Bubbles or whatever they've called it? Do you know what I mean?
Nemo, surely Nemo.
Nemo. I tell you, you normally see these things, and I've never understood this. That some of the sales pitches are become financially free. Get location freedom, get time freedom, do all this kind of stuff. It's like property is passive. I can't, even when people say, "Oh, it's passive," I'm like, it's not. It's not. You're not successfully can you be passive, and it's talking about passivity in your investments, right? And that's just dangerous. That's why you have all of these historic landlords with tired assets, because they've just treated it like it's a passive thing.
Like it's passive, yeah, absolutely.
And it's not.
Or like asset management isn't important, yeah, totally.
Yeah. Those are the three best deals that we bought, like from landlords that have own properties for like 40 or 30 years. And they were just so unimproved.
Well, it's that old classic, how much did you pay for it question. It's like, should be irrelevant, because really it should be based on what it's worth today, right? But people sometimes think in that way. And if they do, it's kind of like, if anyone ever asks me that of me when I'm selling something, I'm like, what relevance does it have? Sorry, I don't understand. So just play the complete fool on that question, because what I paid in whatever climate I paid it with, whatever funding I paid, and whatever sourcing fees you can't see if you're looking at the land reg number, for example, and whatever refurb I did, and if it cost 20 grand at the time and it costs 40 grand now, what's the relevance of what the refurb cost, etc., etc., etc. It's all very. I put an interesting graphic up that I think I nicked from Bloomberg that was about the 60-40 stocks and bonds portfolio this year is down 34.4%. And the cockroach portfolio, which I'm a big fan of, which is called the cockroach because it's supposed to be able to survive any environment, even that is down 12% this year. And that's in US dollars for US investors. But that's the worst year. This is something that's gone up on an average of 8% a year. But then also, it did exceptionally well in 2020 and 2021. So perhaps not a surprise that there's a bit of a bath to take. And you do wonder just quite how much the property market will follow. I'd be stunned to see 34.4% coming off the top. Don't get me wrong. I don't see that as any world of a likely scenario. And because the bright side, I suppose, Ross, of the tight labour market in construction and in general is that because we benchmark resi against the price of houses, and the price of houses is largely outside of the investor control, you know, if people are continuing to get wage rises and this and that and the other, then it does keep prices much steadier than some of the stuff you were saying you were selling in terms of commercial and industrial assets, you know?
Absolutely. 100%.
Great stuff. Any more comments, Piotr? Or are we...
There is plenty. Today the chat's been incredibly active.
Fantastic.
Scott is asking a question. What areas are you buying auction 40k houses?
What areas would I suggest? Definitely Scotland. 100% Scotland.
There's only one auctioneer I'd work with in Scotland.
I own it. I think 40k houses are quite hard to get. They're generally 80k houses that we're buying for 40k. So I don't know many areas that you can get these things. Generally, once you can slip down to the below £50,000 price point, they become quite hard to fund, and you've also got to be really careful with your tenant quality. So maybe I was a wee bit flippant with that because that was the last one we did. But as a house, it was a really interesting thing. We bought it. I saw the photos. I get told it's worth 70. We saw the photos. It was full of beer cans. And we've done quite a lot of these recently. And so we got a price to empty the house, which is normally £500. This one was £2,000. And I'm like, look, just leave all the beer cans there. Just take photos of them. And we've done this maybe half a dozen times this year. Stick it into the auction, showing it as a beer can house. And it just went absolutely mental. Lots of people looking for it. And that's what drove that one. So the guy didn't want to, when he was selling, they didn't want to have to deal with the aftermath of clearing the house and their neighbours seeing what it was like. So we then just took it and sold it. But the seller was long gone from it. That explains what was going on with that one. I think the weird thing just now with the market is we are in this state of flux. There's lots and lots of uneducated people, and I don't mean property education, who still think the market's massively strong and still think it's a good idea to buy houses. So they're the ones probably, I think, that are likely to get caught over the next wee while. Overpaying for things.
It's a great answer. And sometimes it's not about buying the 40k house. Sometimes it's about buying the right asset that you can sell for more and you can improve it much more. And sometimes those 40k assets are the most competitive because there is a lot of people that knows how to refurbish stuff. And that's why, like on our auction workshop, like we tell people, like usually like don't focus on the things that are too vanilla. I mean, sometimes you can buy vanilla in the auction, but very often there'll be too much competition, and it's better to focus on the problem properties and learning how to solve the problems that other people don't know how to solve.
Well, I totally agree. I think what you'll see at some point, maybe relatively quickly from what you just said about the stock levels in the auctions, is the same that you see on a day where the stock market just goes down across the board. There's 1%, 2%, 3% of stocks on days like that are well worth buying, but it makes no sense for their price to go down. They're just going down because people are selling indexes, and the same goes for auction. There'll be some of this stock where everyone will go, whoa, well, you could listen to this today and think, well, I better stop buying. People might get that message. And if everybody did that, then ultimately there's going to be quite an incredible buying opportunity in some of the stuff that's in auction that can't, like Jay was saying, you know, go in at this price and then this price and then this price and then this price. It needs to go this month. And if it doesn't, the seller's going to be in like some kind of trouble. Those 3% of lots or whatever, it's why it's still, I think at points like this, you have to double the work that you put in, realistically. And it's also, operationally, you know.
But it's thinking through the problem. So what Piotr's saying, I can talk about. Remember those flats in Edinburgh that we put into auction, Piotr, that I bought? Yeah. So it's a great story where It's 2 full townhouses in Edinburgh overlooking the castle at the back. Lovely asset, way better than I would normally have, because obviously I quite like the 40 houses. But it was 6 apartments that had been converted, and it wasn't quite done to the way building control had wanted, and they'd been illegally used as serviced accommodation. And for me to get surveyors, or not surveyors, to get auctioneers down south, because I think the market's a UK market's Scottish, we really struggled, didn't we, to get them to give any idea of value because of what was available in Google. And yet 2 months later, 3 months later, I think I paid 1.1 million for them. We spent about 200 grand on it, and I got a survey value 2 months later, because they look slightly different, of 2.5 million quid finished. So, you know, at the end of the day, who was right, who was wrong? The telling of the story is, you knew what the problem was, you knew how to solve the problem, and then you could create the value back out of it. And I think that's what you do quite well. You're looking at things you can get in and get out of, and it's irrespective of whether it's 50 grand or whether it's what was that thing, 40 grand with air rights that we looked at. It went for like 2 billion, and all these. This is a great buy at 40 grand. Yeah, it went for 280. Yep, it was a great buy.
We did a deal recently with Ed, actually. He brought it to us because he saw in the auction, but it was so he wanted to us to be involved because it's a commercial deal, fully commercial one. And since we did it, like, everything seems to be working super well. Like, we're improving the value of it, increasing the rent, signing up new tenants. And since then, Ed is like, oh, this is commercial. This is so good. Like, let's do this one. And it's like, it's so like, once you do something, it's like so easy to like follow the same pattern. And I think people just need to sometimes get off the vanilla refurb thing and explore something a bit more, I would say, niche or like less.
That's why I always say I hate the industry that teaches you, you know, what strategy do you follow? It's like, I like doing deals. That's my strategy. It's not that it needs to be HMO or hotels or commercial to resi or whatever. Strategy is to do deals. That's really what we've been talking about today, isn't it?
Yeah, indeed. So many more questions.
Helen's been quiet, hasn't she?
Yes.
The last half hour.
Okay. Bushra is asking, the seller still pay auctioneer's fee if it's withdrawn on the day of the auction?
It depends if you want to withdraw the property pre-auction, and that is against the advice of the auctioneers, you're likely to be charged a fee. But within 72 hours of the auction, if they're certain there's nothing to be done, they will suggest withdrawing it to protect the price point, and there'll be no fee paid unless you paid like an entry fee for the marketing or whatever. There'll be no percentage fee that's payable. That's pretty much an industry standard for at least the traditional type auctions. I don't know. I've seen a set of terms and conditions from one of the modern method of auction, they like to call themselves, and that's got some horrible little scorpion tails in there. And the way their contract is structured is, if it doesn't sell or they choose not to sell it because there's no interest, they have the automatic right to renew the clock and start and put it back in again. And in that process, they will batter you down on price, which any agent will do. It's standard property chat, right? If it hasn't sold here, it's not because it's not sellable, it's because your price expectation is too high and you need the market to move in your favor, so the price has to come down. But yeah, I'm not 100% sure on that.
Can we touch on modern method of auction there? Because I saw you wince when you were trying to get those words out of your mouth, which is quite unusual.
Because I'm such a gobshite, right?
yeah, but just the way you look. Do you know what the biggest auctioneers in the UK now? I Am Sold.
Yeah.
So the biggest auctioneers in the UK, and they just bought SDL's relationship with all the estate agents, didn't they? About 4 weeks ago. And in Scotland, the interesting thing is they've just done a deal with the Countrywide Group, which are fairly prolific in Scotland. to start selling Countrywide properties that way. And I think Countrywide are quite excited about it because they are now thinking this is the way that they're going to bolster their fees. Obviously, for them, it's been a declining market for the last 4 or 5 years. So that modern method thing is actually really going to be what auctioneering is all about over the next wee while. And I think tying in that with what we're talking about, because I think modern method valuations rely on what Jay was talking about earlier, where even from an auction perspective, they overvalue, they're looking at retail prices for houses with the estate agency to get people in. And it's the estate agents who are now going out selling the concept of going into that. So the values at this level, when in fact real auction values at that level, so it's just a completely different thing. But it's just getting more and more popular.
I mean, the question is, do they value them? Because my understanding is that the agency partnerships where they get more than the majority of their stock from is just agents who have the chance to, if they charge 1% on standard, if they put it in with any of those types, I say modern method. I winced at that because that was I Am Sold's slogan. It's not actually the definition for all of the other operators, although I Am Sold love it when they use that term, right? Because they've pretty much, trademarked it. The relationship, I really like the process. It could be the perfect bridge between private treaty and auction. The problem is it's not yet. And the reason it's not yet is because there are too many fingers in the pie. The fees are too high. And these are fees that you can't chuck into a mortgage. These are fees that you take out of your deposit or additional saving. And look, it works because in the last 2 years, coming from obscurity, they're now matching, if not starting to beat traditional. And I'm an auction fan, so either one works for me. But there are a couple of steps that it needs to go through before it could shut down the old school ballroom traditional style auctions. It could completely shut it down.
Which feels a bit
sheer greed, it won't.
It's the purple bricks, though, isn't it? Shut down a lot of estate agencies, probably been proven to be the right model, but at the wrong price. They just were too low.
Yeah, I mean, what they've done is they've gone into estate agencies and said, "Oh, you're charging 1%. Well, if you give it to us, we'll give you 2%." Whereas they should be saying, if this is not going to sell, you need to cash in now. Hand the lead over to us. You'll get 0.5%, which is 0.5% of something you were never going to get because it was never going to sell with you. And they should have done it like that, but they haven't. They've created this, and I've listened to calls and I've seen emails. It's toxic, and it's unnecessary because they've gone in on this whole. They've got all of these local managers, area managers that go in, and it's all glitz and glamour. It's all here are the fees. This is what you're making. They're quite proud in it. There was
the value proposition is more for less service, which is great for the industry and horrific for the client ultimately.
Absolutely, and the fallacy here is you get the sale. But anybody who knows how to add 1 and 2 together gets 3 instead of 4, knows that the buyers are cutting their maximum bid down to accommodate those fees. And the bidding is going up, but it's not the same. It's the same kind of level of toxicity in the traditional auctions where you have some sellers putting fees in their special conditions.
Absolutely.
That are written alphanumerically instead of numerically. So if you're speed reading through something, there's no pound sign, there's no percentage sign. It's written out in words. It's in 0.8% font, right? And it's buried in the arse crack of the document. It's not good. These are not good things, and they're not necessarily things that you would find in traditional. So in a certain respect, you've got quite a lot of pain involved in the auction process. It's painful for the seller. You're telling them you're going in at this price or nothing's going to happen. It's painful for the buyer because the time restrictions, the definitive, it may not come with searches. They may have to take a bit of a punt. It's a painful scenario. What you do not need to add to that painful scenario is more pain, because that's what takes the attractiveness out of it. That's why estate agents are 98% of what they're not, because you've got the market types, but they are a vast majority of the marketplace, and that's going to subsist and sustain whilst the auctions are incapable of self-regulating and managing itself, and effectively being good advocates for handling clients and handling customers. Because at the moment, with some of these online auctioneers, who is their client? Who's their client? I know who my client is because my client pays my fee.
Yeah,
So if you take on a seller and that seller isn't paying you, you're now being paid by the buyer. It's a massive conflict of interest.
Or the client is actually the client relationships between the agent and the auctioneer, isn't it?
Yeah. Well, yeah. Well,
Which is where they spend their money.
Well, that's clear. I mean, it's a 100% increase on their fee. Of course, there's a, but that also, yeah, but that doesn't change the conflict of interest statement. It just shifts it from one direction to the other. I think, look, Rightmove and Zoopla really got on board with this. This online auction, the conditional auction, right, which is the proper term. The conditional auction, they've really got on board with, like, this is something the industry's going to grow, it's going to get bigger. But Rightmove and Zoopla, I don't think pay attention to these tiny little things that make a massive difference to people's affordability, and it's not great. In the same vein, if we go back to the earlier part of the conversation, is I think that the government and the banking system are going to have to really start looking at affordability, because a big failure for the government at the moment, and they've all been talking about this. Labour have been talking about it. Conservatives have been talking about it. This has to be generation buy, not generation rent. You failed.
Mm-hmm.
Absolutely and objectively, you failed. And even the ones in the last 3 to 5 years that have been able to buy, when those mortgages come up and maybe the equity slice has dropped down massively, or maybe the affordability on the mortgages goes up and squeezes too tight, how many are you going to repossess? 30% of the market you're going to bang into auction? It's unlikely. And what it will do is it'll break whichever government's in power at the time, 100%. And who's going to trust the bank, considering that we bailed them out of their of the 2008 to 2010 market? That us in terms of the people rather than the government, right?
Here comes Fannie Mae and Freddie Mac. That's what I say. Say.
And this is where it becomes a really difficult kind of thing to look at. And you do a really good job, Adam, of kind of like pulling these pieces and then going piecemeal and explaining them through. But the fallout here, I don't know how they're going to handle it, because you mentioned, Ross, that the corporate clients, as we would consider them, the inquiries you're receiving have gone up, what was it, 500%? Speaking to the other auctioneers, it's the same. They've been kicking this can down the road. Obviously, during COVID, there was the kibosh on repossessions, which the government put in for obvious reasons. But it's only been made worse. The longer something stays in that environment, whether it's mortgagees in possession or not in possession, receivers, LPA or not LPA, the problem that you have there is that you don't just have the original debt that's defaulted, you then have fees.
Mm-hmm.
And these fees, they don't stop. So the chance of someone being able to get repossessed and walk away with 30 or 40 grand to then give themselves a chance to either downsize or start saving, rebuilding their lives, is massively reduced. And I don't know how anyone's going to come in and fix that. I suppose they could privatize the NHS, reduce everybody's tax. Yeah.
What's coming again?
That would be exceedingly inflationary, though, if you did do that at this point, which would not be the right time to do it. The reality is we need to take some pain. Yeah, that's the reality.
100%.
Or move somewhere else.
That's it. Portugal. I heard Paraguay is quite nice.
Malta seems nice.
Malta's, Malta is
a bit sharky, but it's nice. Yeah.
Yeah, we all do our bit of research on this show for the rest of the population. Nice one, guys. Well, it's been incredible chat. And thanks everyone for the comments. The chat's been super active today. And keep in touch. We'll be back next week. And good to see everyone.
Thanks, everyone.
Great to have you back, Ross.
Take it easy.